Okay, hello everyone. This is Andy here looking at the markets, and I wanted to say thank you for everybody who's attending. Welcome to the webinar. We're just going over some of the markets that I'm looking at, some of the probably the trade setups, some of the things that I expect coming into the next kind of weeks, the days, weeks, and months. Most importantly, there'll be take a couple of questions towards the end of the webinar. So let's go ahead and get started. Taking a look here, the first thing that we always want to do, this right here that you're looking at is a daily time frame of the markets. So you're taking a look at the dollar index and the pairs. Okay, so the pairs that trade through the dollar. Over here on the top left-hand corner, you have the dollar. And then on the next to that on the right is the Swiss franc, followed by the Canadian dollar, and then the Japanese yen along the top. And you have the euros in the bottom left. You have the pound next to that, and then the Australian dollar and the New Zealand dollar. This is what I call my dollar grid, if you will. This is what I look at day in and day out. And this is probably what I spend a majority of my time trading, especially from an active vantage point. Okay, so when I'm talking about, when you start to become a little bit more active in your own trading, then the effort should be to narrow the amount of markets that you trade and focus on somewhere where you can develop an edge. And this is what I've been able to come up with for myself. So in all likelihood, the effort is to help to not only systematize, but to make things a little bit easier on yourself when it comes to trading the markets. So anyways, what I always do is I start with the dollar index. Okay, so this is going to be the anchor. This is going to be the always the starting point for me. And if I zoom out here for you, this is this is a dollar index. This is not the dollar index futures that I talk about in my analysis, but this is what I look at for trading purposes on some level, just to compare the action that I'm looking at from the euro perspective. But over the course of the last couple of weeks, what we've had is this break of this trend line here, and what we can say is that after this trend line was broken, you had a push through the trend line and then a retracement back to the trend line. And then now we've actually broken out of a smaller trend line, which is probably one of my favorite plays. Okay, so this is what you're looking at. And I've even noticed the same kind of situation in the Swiss franc. So one of the things that we'll talk about later on in the webinar is how to identify a spot, or how to spot a change in the trend. Okay, so this right here is probably one of my favorite ways to do it. And usually what you have is a sequence of events that will let you know that the market has culminated in a move, and then you are at least trying to work your way in the opposite direction. So let's go ahead and get started here. What you want to look at is, notice that first of all, we have had this persistent downward move. In this situation, we're looking at a reversal, or a bullish reversal. Okay, so this would be a bullish reversal situation. Now, what I want to emphasize, first of all, is that we have pushed down and the market has been able to establish a trend line. We could connect these highs here, which is probably what would have happened before the break of this level right here. And ultimately, when you're actually in the moment, That's probably what we would have noticed first and foremost, is that you have a push to a level, and then you have a bounce off the level, and then you have a break of the trend line, okay? So the first thing that I'm going to notice here is that this 11,760 was probably a level that I was very interested in. And for various purposes, in terms of like whatever I might have been measuring, typically it would have been it would have been a very important low for me to watch, and then the market rallied off of that. So the first thing you need is in a bullish reversal, you need a downward trend. All right, so once the downward trend is complete, then we start to actually see, let's just say, a break of the trend line, okay? From here, what I like to notice is that we'll also start to see higher highs and higher lows on a short-term basis. Once you have this scenario, then you have what we would consider at least the completion of a downward move. Okay, so that is another thing that you'll notice is that this retracements here have a tendency to be uniform. Okay, so what you'll notice here is that each one of these retracements are a certain percentage of return. And then at the end of the move, you have a retracement that is bigger than all of these retracements on average. So that's this right here. This move is a retracement bigger than the previous ones. Okay, that's one aspect of it. The other thing is that you'll notice that the time that it takes for these retracements have a tendency to be uniform, right? So that's something else you need to pay attention to, is that notice that this retracement here has taken a lot longer than all of these. So that's another component. Right, that really kind of hits the nail on the head if you haven't been paying attention up to that point as to what you need to consider when it comes to the move. And then the other thing that you'll notice is that you have a tendency to start making formations. A lot of times what people will do is they'll talk about how you take out the previous high, right? So notice that on the way down, you were unable to take out previous highs. So this high does not count because you did not have a test of the low here. But you can see here that you had a lower low. So notice here that this is your low, and that this low was your lower low, but this high did not take out this high. Okay, we're still in a downtrend. This is a lower low, but this high did not take out this previous high. Okay, we're still in a downtrend. This low is a lower low than here, and this high did not take out this high, so we're still in a downtrend. Here's a lower low. This high did not take out this high. Here's a lower low. There's this high did not take out this high. And all of a sudden we have a lower low, and then boom, we have a high that took out the previous high. All right, so we got a high that takes out the previous high. Okay, that's another thing that you're noticing there, right? So once again, you have uh, a uniformity on the downward trend, and then all of a sudden you have this break above the previous high and essentially a change in the uniformity. So once again, what we're noticing now is that on top of that, let's move forward one more time. We could talk about this retracement over here. Notice that you had this move up. This leg up, this is considered a first leg. This is probably a minor leg anyways. I mean, if we were talking about Elliott wave here, I can probably see a Elliott wave pattern. We have a minor 5 wave up. And then one of the things that we'll do is we'll measure this low to this high over here, and then that comes up with this 50% retracement. And on top of that, you have a back test of this previous trend line. Of course, at this time where we break above the trend, that's where we've decided that at least the downward move is complete. The next question is, will we go sideways or will we actually reverse and go to the upside? And so that's where we always are needing to pay attention to see what the market is wanting to do. In my opinion, this break, so then what I do is I add another trend line. You see this minor trend line here, and we had a break right here. So you can see here that the market retraced. Now this is the new retracement. And then once we have a break of the retracement trend line, that is the actual signal or the trigger for me to take the long side. So what I'll notice, let me draw it over here, is that I have a downward move, and then we break above it, and then we come down and establish a higher low, and that is where I want to actually enter the market, is after we've established this higher low. Okay, so that's one of the things that really should change the way you look at markets. And the same thing is going to happen on the upside. So you're going to have this big push to the upside, wherever it might be. You're going to come down, and then you're going to come up and make a lower high. And when you're able to break a counter trend line, typically from here, that's when you want to get short. Notice here that this coincides with the 50% retracement level. So usually what happens is that you measure this move here, and then you'll get a Fibonacci level that you can use to trade against. So in this situation, the same thing, you had to move down, and then you had a push off of the low, and then you had a Fibonacci level. In this situation, it was the 50% retracement level. Okay, so you can see over here, here's your 50% retracement level. Now, once you have that break, that's your entry point. This is your entry. You have to be, you cannot just get into the trade very aggressively, because your stop has to be down here below this low. The trade has a dramatically higher percentage of success if you put your stop beneath the beginning of the move. So if this is your A and then this is your B, we can consider this a C, and then your D would probably be somewhere up here or whatever. You have to put your stop beneath the A point. Therefore, your target would be to project the length of this move off of this low. Okay, so whatever this, you need to measure this move and then forecast it off of this low. And that'll give you your C, and it'll also give you your target. That's how you should start to look at that. And then the other thing is what you'll do is measure this high over here. You'll take this high, measure it down to this low, and then you should start to see Fibonacci levels that show up in this area. Okay, this will also be a fib level probably. And so that gives you a little bit of confluence and an idea about where you can target the end of the move. So this also answers a question that we have that says, how do you know when to enter or exit a trade? And we've talked about knowing when the trend changes and then how to enter the trade and exit. So the break of this previous trend line, it signifies a trend change. Most of the time what you can expect is that the market will go sideways. But in this situation, it looks like it's actually bouncing. So your entry, how do you know when to enter the trade? This is your entry point on this particular trend trade. And then your exit would either be down here below the original low or your target, which is up here, which is a measured move. So with that in mind, that is one of my favorite things to do in terms of looking for a change in a trend. And that also gives you an idea about what I'm looking for in the dollar index futures. Okay, so I'm going to measure this high to this low. And you can see that's, I have the 78.6 here, but I want to put the 61.8 and the 5.0. Now let's go and figure out, take the trend-based fib extension and measure off of this high to this low. And I always look at the 100% projection because that is essentially our ABCD. Okay, so this, let me make sure that's the, yeah, that is the one. I'll do it this one here. You can see here, there's the 1, right? That signifies the 100%. So let's go see what Fibonacci levels are there. And you can see that it's pretty close to the 61.8% retracement of the bigger swing. So what I would be looking for is, as long as this market can stay above this low here, this A point, then I will be confident, or my confidence will increase that I will expect the market to push to the ultimate destination, which is up here. Okay, this is my target. And also what I can say here is that I don't mind if the market will come down and retrace further, but you have 61, 78, 6. These are all lower Fibonacci levels that could be hit. But what I'm noticing is that we broke above this trend line. So it seems to me like this Fibonacci level 50% is going to suffice. The market is content with buying after we've tested that level, considering that it was also the backside of a trend line. Okay, so as it goes, as we progress here to the end of the year and begin next year, 2018, this is going to be what I'm looking for in the dollar index futures. So If you have any questions, don't hesitate to reach out. I'll be happy to help with any questions you might have, and hope this has been helpful. We will see you at the next update.